Hello, everybody, and thank you for joining me today. It's Alan Barry Labucan with the Rocks and Stocks News Show. We've got a very special guest today in Cam Currie. Cam is a senior investment advisor at Canaccord Genuity. He's been in the business for about 35 years. And he also runs Currie Metals and Mining. Cam is a big advocate for the industry. We need more advocates for the industry and a great public speaker. Cam, thank you very much for joining us today.
Alan, thank you so much for having me. I really appreciate the time here.
You know, Cam, often I'm talking to guys from the mining side and the exploration side, and not as much from the brokerage side. But what really impressed me, well, one is who recommended you to come on my show, which is my good friend Ewan Downey from I-80 Gold. Ewan's just a sharp guy and knows everybody, and he had great things to say about you. But it's really a great opportunity for my audience to understand what you see from your side of the street.
Mm-hmm. Well, that's a very open question. And I think one of the things that most people in the audience will appreciate, unfortunately, is the fact that the absence of recognition of our sector. And when I say sector right now, I'm going to focus solely on precious metals. You know, here we have gold, on 4 days ago, pierced through $2,100 all-time highs. And there's no fanfare. Nobody's paying attention. And as I say that, that's a Western world phenomenon. If you look at what's going on, this is so key. If you look at Eastern central banks, Middle East, the Brics nations, so to speak, you know, more and more, they're diversifying into US dollars. And gold ownership is on the rise in this part of the world. And yet, in the Western world, if you look at gold ETF holdings in North America, the gold ETF holdings in the last 12 months have gone from 3,600 or 3,500 tons down to 2,700 tons. So think about that. Gold's trading at all-time highs, and yet the ETF ownership in North America is going down. The balance is keeping gold price where it is people outside the United States looking at the United States, their fiscal house, the deficits, the political situation. We have two wars going on, and they're moving more and more money out of the US dollar. And yet nobody talks about that in North America. You know, I deal with a lot of high net worth family offices, and one of the things I say to them, especially Americans, is that here you have all your assets denominated in US dollars. Your homes, your real estate, your bonds, your equity portfolios, and that. And simple question, what are you doing to protect your US dollar holdings? And one of the things that people, and Alan, you'll appreciate this, people don't realize is the three largest reserve currencies in the world are the US dollar, euro, and gold. Okay. Exactly. And the thing about gold that people just don't really think about in the Western world, they used to, but not so much now, is gold's the only currency in the world that has no political attachment, no debt obligation, and no printing press. And the rest of the world continues to buy it. Whereas our world is convinced that Bitcoin has no political attachment, no debt obligation, no printing press. It's a new digital diversification of the US dollars. Right. And so we're stuck in this narrative vortex. And all I can say is that gold's been around for 5,000 years. Bitcoin's been around for a shorter period of time. I'm not going to get into the debate on this, but I can guarantee you're not going to lose your envelope of gold, which is held in a vault in England, for example, like you could with it.
You bring up a couple of really good points that I want to touch on. One is that, you know, you look at the price of gold and silver for that matter, and you see where the price is. I mean, with gold, we just had the first monthly close above 2,000. The next day, it had its highest daily close. Sunday, it had its highest in the futures market. When they start going through those key technical barriers, that's a momentum indicator. And you see the price, and then you see the price of the equities from miners, the biggest miners, down to the mid-tiers, down to the explorers. and the valuations are like they were back in 1999 and 2000. And so you ask yourself, well, why that is happening? And you touched on the exact reason. It's the Chinese, it's the Indians, it's the central bankers that are buying gold, and they don't buy gold stocks, but they're coming to those technical barriers that is going to start to bring that memes investor crowd and more people into the equities. And they're coming from such a low base that, we could have a decade or longer bull market for the metals and the metal stocks.
Well, and again, you touch upon something that's really important there about the disconnect between the equities and gold. And like you said, they buy gold, they don't buy equities. And yet the Western world isn't even recognizing the fact that gold is trading new highs. I mean, this past week, CNBC, we saw some narrative. We had some people getting out bullish on gold for the first time, okay? But one of the things that, again, I drive home in all my interviews is narrative. And narrative economics is driving force behind money flows, and money flows go into ETFs, and ETFs go into underlying stocks. And we have no narrative in the Western world right now towards gold, let alone the gold ETFs, gold equity ETFs. Case in point, the physical ETF has been going down all this year. Well, the gold equity ETFs is doing the same thing. So when it reverses and the Western buyer comes back into the gold ETF positions, when they recognize that maybe they should have some insurance policies or diversification of US dollar holdings, when that transition takes place, then the gold equity ETF should get inflows. And Alan, this is going to surprise you, and it's going to surprise the audience too, because most people don't realize this, but the equity sector is a very tiny sector. And yet we're the miners of the third largest reserve currency in the world. But here it is. The market cap of all the gold equities on the planet today is less than Home Depot.
And probably trades less in dollar value than Home Depot does on a daily basis.
Probably. But my point being on this one is there's the opportunity. So, believe me, this year I've had some clients going, okay, Cam, everything you've been talking about is taking place, but how come we're down 20%?
Right.
I said, well, gold's performed, but the gold equities haven't because, and again, Alan, I'll just go back on this. This is really important. Going back to the 99 analogy you gave about valuations, because that's when I really started getting involved in the gold equities, because the dot-com bubble was so stupid, and we were buying gold stocks at $2 an ounce in the ground when traditionally they're valued at $50 an ounce in the ground. And in 2002, gold was at $320, $350, whatever. And no one was paying attention to the fact that gold was up 25%. And we kept on buying and buying and buying these stocks. And it dawns on me now, looking back, is that we're in the same phenomena today. Because last November, we had the capitulation low in US equities. What's happened since then? We've had a big rally in US equities because people are chasing the muscle memory of the past, thinking they can make their money back. And then, of course, then you have the indexes where they are near all-time highs because of the 7 big companies that are driving these indexes and all the ETF flows going into these indexes. And of course, the stock performance suggesting there is no recession coming, so everything's fine. But all that concentration still going back to the muscle memory of the past, thinking they can make their money back. And no one's looking into the corner of the room at the new girl that just walked in at gold at all-time highs.
As you're explaining that, it makes me think of the meme stock crowd. When these young folks get into a stock and start spreading the word on the internet, we saw that with the silver squeeze a couple of years ago. But I think that's where, when they get a hold of gold and gold stocks, look out, because they're a promotional machine that we've never seen anything like in the mining.
Well, now, just you may not know this, but when Bitcoin was at 18,000 and gold was around 2,000 a while back here, on Google, one of the largest searches by the meme investors, the Bitcoin investors, was, how do you buy gold? So they actually looked, okay? But the problem with gold in the past is, difficult to buy, difficult to store, right?
Yeah.
But you can buy the gold ETFs.
Right? I'm looking forward to what you're just about to talk about, because we talked about in our pre-interview. Go ahead. I'm sorry for interrupting you.
Okay, so again, most people, in fact, next Tuesday, I'm going to be at a World Gold Council meeting venue in Vancouver. In fact, they've actually just asked me to MC it, which is going to be exciting. And so David Tate, who's CEO of the World Gold Council, and Randy Smallwood are going to be a fireside chat. Anyway, to make a long story short, what's going to take place here in the next 12 months, hopefully, is gold moving into the 21st century. And that's gold 24/7. And so I'll start off by saying about 3 months ago, Larry Fink from BlackRock was being interviewed on CNBC. And you knew the segue of the conversation was going towards BlackRock's endorsement of ETF towards Bitcoin. Okay.
Yeah.
So the conversation starts, he starts talking about the economy and everything else. And then, unprovoked by the interviewer, Larry Fink said, gold traditionally has been a great diversification out of fiat currencies. But the problem with gold is it's difficult to buy, it's difficult to store. And from there, he segued into the rationalization as to why BlackRock is backing an ETF to buy Bitcoin. And so if you look in the last few months here, Bitcoin's gone from 18,000 to 43,000, largely due to the ETF of Bitcoin coming.
Starting to, yeah.
That. So think of what Larry said. Traditionally, gold has been, and but it's difficult to buy, difficult to store. So let's fast forward to, and again, I don't have the timeline. Hopefully it's 2024, but it's been worked on for the last couple of years by World Gold Council. And it's very complicated because you have to make sure you have all the bullion banks on side. You have to have the financial institutions on side. But really what it is it's a digital stable coin. And it's bringing gold into the 21st century. So just think about that. So now you'll be able to buy gold like you do I won't use the word
with an
Bitcoin.
Instrument backed by the World Gold Council.
And the reason why that's taken so long is the LBMA World Gold Council, which are major custodians and representatives of the physical gold each year that's mined. You have to make sure you have 100% authenticity of gold source. Because I don't know if most people don't know this, but a few months ago, Trafigura lost $500 million on a nickel scam. It was nickel coated, but it was lead filled, and it was fraudulent nickel. So one of the things that's taken time is to get all the bullion banks on side, the LBMA World Gold Council, and that's done. So when you actually buy a digital gold, you know it's sitting in the vault in London, in Switzerland, in Singapore. And so you actually have physical ownership of that. So you actually, for the first time, will be able to buy in digital form one of the reserve currencies in the world. So going back to Larry Fink's criticism of gold, now it's an opportunity. So what's the financial world going to do with this new instrument once it comes in?
ETF and all kinds of instruments to back around.
So going back to it, and trending, but again, it's just, that's one component to it all. I mean, let's not lose sight of really
but it's a huge component because that opens the door for all of these Bitcoin young folks and meme stock players to start getting into the industry in a simple, secure, confident way that, you know, you buy an ounce of gold through them, it's an ounce of gold.
Well, exactly. But again, you want to avoid the volatile extremes too. I mean, that's the thing. It'll become a trading instrument by default, unfortunately. But the reality is, we want to bring gold into the 21st century.
Yeah.
And gold, you know, traditionally, if you go back, 30, 40 years ago, gold represented 5 to 10% of your portfolio, right? Now in the United States, it's 0.25%. Even guys like Ray Dalio come out and say, if you don't own gold, you don't know the history of fiat currencies. Right? Even Sandy Druckenmiller just recently
Druckenmiller, all of these big guys are talking about the importance of holding gold.
But where's the ownership? Like I said, the sector's so small, the Western gold ETFs continue to decline. Well, they've actually been flattening out here. We've had a couple of days where 20 tons were bought, 10 tons were bought, but then 8 tons were sold, 5 tons were sold. But we've looked at the rate of change of the liquidations completing. The trigger point is going to be when the gold ETF flows come into the US ETFs, in my mind. And when that starts happening, the gold equity ETFs should
It's
trigger.
happening a little because I'm seeing that they bottomed out in the last month or so and they're
Yeah.
starting to creep up, just like the majors are doing the same. They're bottoming and they're starting to creep up. But with the price of gold here, this is, you would expect that they should start getting a lot more aggressive. And I think maybe one of those technical indicators is the 2100 level. We start getting it, well above 2100. And I think it's similar to the 2000 early bull market, 2001 to 2. Everybody kept on asking me, when's gold going over 500? When's gold going over 500? Finally, it did. And that was really what lit the fuse, I think.
Well, going back to my analogy or comparison back to 2003, I remember early 2003, it's when the Dixie really started breaking down from 104 and gold broke out through 400. And, last year was a real tough year in the gold equities because we had the Dixie melt up because of interest rate yield chase, and gold got hammered. And everyone's going, okay, what happened? That's one reason why we're still seeing this malice market in our sector is people said last year, all the reason in the world for gold to go higher happened, but they didn't because the US dollar went up and the inverse relationship between dollar gold. And I think you and I talked about the other day that if you're in Turkey, for example, as a citizen of Turkey, you're so lucky if you actually own gold because gold went up in every other currency. So gold served its purpose as a store of wealth.
And
I think
that's
what's
the
going to happen.
story for almost every currency in the world except for the US dollar. And now it's on the verge of being at record highs against every currency.
But reality is, what other asset class is trading at all-time highs? I mean, that's the thing. We performed very well in relative terms. It's just that we didn't perform an equity rate of change or investment rate of change because the capitulation in U.S. equities into November allowed this rally to, opportunity to go for this year. So people were making money there. Whereas we were in that flat range, but we didn't go down, right?
Right.
So again, going back to, some of the economic indicators we look at all the leading economic indicators, the employment numbers and that, but every time interest rates have peaked and rolled over, every time it's ensued a new bull market in gold. And so now we have the 10 years down at 4.2%. We're seeing the interest rates starting to drop. Inflation starting to abate, unemployment starting to tick up. And I suspect the acceleration of unemployment is going to really pick up in 2024 because I am of the opinion a recession is coming. And with the US dollar rolling over, the validation of gold as
and it's funny, it's right at that 104 level again that it's rolling over.
I know, but again, so the narrative, but the narrative is really what has to drive this, right?
Yeah.
And I think, as people start looking at the situation and recognizing that gold actually is a performing asset class and something they don't have any weighting in, I think people will start paying attention.
Well, you talk about some about the interest rates, and it's what the Fed does that really catches the most attention. But you look at the reasons why they have to start lowering rates. America's in a death spiral of debt. They've built their economy on debt. They created too much debt. The American national debt's 34 trillion. Interest on the debt is 1 trillion. They're spending more money on debt servicing than they are on military. They're funding helping fund the 2 wars in the Middle East and Russia, Ukraine. And now it looks like Venezuela wants to start some sort of a conflict. The politicians, they can't reduce spending. They make a mockery of the debt ceiling on an annual basis. The inflation, housing sales have stopped. Delinquency on card debt is increasing. Credit card debt's over 20%. Commercial real estate is a ticking time bomb that's highly leveraged with all their debt having to roll over and high vacancies. The reasons that the Fed has to lower interest rates are quite compelling.
And on top of that, one of the factors you have to point out too, that the narrative out there right now is, maybe a soft landing, but we're probably going to avoid a recession. And we've had record low unemployment and this strong economy, strong consumer. And you and I would agree that the consumer is not as strong as the media makes it out to be because of the debt levels and that. But during this economic period of the last 12 months, the US still ran a $2 trillion deficit, at a time when they had record low unemployment. So if everything's so good, you're running a $2 trillion deficit. And so this goes back to the obvious in our minds as to why these Eastern central banks and Eastern and Brics banks and wealth groups are diversifying out of US dollars, because they're looking at the world very differently than how the North American world is looking at itself. And so here's the other thing too on debt that people don't really understand. And this is one of the things that I think is really, really important, is that in the last 10 years, global debt went from 200 to $300 trillion. And that was during a time when interest rates were at zero. In fact, at one point, there was $15 trillion of negative yields. And so what you got is you got a society and a corporate world and a central bank and governments of the world got complacent with free money. And so what you got is debt leverage, $200 to $300 trillion, and you had asset appreciation growth because money was free. And so you have these asset bubbles that are starting to unwind. And so you look at the asset bubble and you look at the weight of the asset. So now you have debt that's gone from $200 to $300 trillion. But what's different now is the weight of that debt has gotten extremely heavy because of high interest rates. So that debt is sitting on the asset prices. And I'm quite honestly, the only reason why the US isn't in a more difficult position is the 25-year, 2.5% mortgages. I mean, that's what's keeping the consumer strong. In Canada, we have 30% of our mortgages renewing next year.
But what about the poor person that's on a variable interest rate on their mortgage?
Oh, all those. So you look at that, and so we're a bit of a barometer on the stress on the consumer. And although you see the booming real estate market still in Vancouver with all the cranes up, that was a lot of those were built off of policies from zero interest rates from 20 months ago, right? So again, we're in a situation right now where this recession is taking longer in the States because of those mortgages. But you look at things like Affirm, which is buy now, pay later. They just came out with their numbers, and Black Friday numbers, sales up 40%. Does that represent a strong consumer? People are buying now, pay later on $100 products or things for Christmas? No.
It just goes to show you how ingrained that debt is in the system. But something that it boggles my mind that people don't understand, and economists at the Fed don't seem to understand simple math. If you go from free money for over a decade and then you make it expensive money, you're going to cause problems. That's simple math. It's the opposite of compounding interest being the eighth wonder of the world. It works against you when interest rates go like that. And I think the Federal Reserve.
Case in point. I mean, we already saw the first crack, and that's Silicon Valley and First Republic.
Yep.
Then you also have regional banks. But I also point out to people that we actually saw something about 5 months prior to that in England, when all of a sudden they changed the monetary policy, and there was 3 pension funds that almost got vaporized. They had to liquefy the system because of the sensitivity to the interest rate move, right? Yeah. And so again, one of the things I like to point out to people is that the average pension fund needs a 7.75% annualized rate of return to meet future obligations. So for 10 years, money was free. And you look at these, okay, the other question I ask, and no one really had, I know the answers to this, but who are the buyers of the 25-year, 2.5% mortgages? Well, we know Fannie Mae is one of them, right? And they're 100% backed by the Federal Reserve, who has a balance sheet of $8.2 trillion, okay? Yes. But there's pension funds, life cos, I mean, municipalities. And so, Silicon Valley got stuck because they took their short-term money, bought long-term bonds, and and they got
And
squeezed
someone
and they
asked for that
liquidated.
short-term money back. A
Exactly.
bunch of them at once.
Well, pensions are, big behemoths. So, and again, but there are risks building in the system, but no one talks about those risks. And again, going back to debt going from $200 to $320, and all of a sudden the cost of the debt goes up with the biggest percentage change in history, and there's no consequences. I just don't know how there's not going to be consequences.
It's amazing. You look at just the United States after putting making a mockery of the debt ceiling for another time. In 2 short months, they've already added $2 trillion in debt.
Mhm. And that's in a strong low unemployment economy.
An apparent or alleged
Yeah.
strong economy, where
So again, I'm not
the
trying to.
average work week is 23 hours.
Well, also the other thing too about the employment numbers. The unemployment numbers came out about a month ago, and it surprised the street because it was very, very strong. But if you looked under the hood, 844,000 full-time jobs were lost. 1.25 million part-time jobs were gained. So explain to me
That's
why
why they
a part-time job
average hourly work week is on its way down.
right. So, these things are taking place. But again, going back to it, the narrative is a narrative, and the narrative is where the money flows. And
But getting in ahead of the narrative is what is. We talked and tell the folks a little bit about your Filo. I think you can talk about Filo Mining, right?
of course I can.
Okay.
Of course I can.
Tell folks about. I think they've got something phenomenal. But tell them about your experience with Filo and being ahead of the narrative.
Well, again, I think one of the situations about being in the mining space is because there's no money really paying attention to it. Now it's changed a lot. We've had the lithium space, the copper space has been strong. Now it's coming back, unfortunately. But this will be the last dip before the big rally because of supply side issues. But here's a classic example. In a market where no one's paying attention, great opportunities arise. And sometimes they come along that are so low risk, so high reward, and no one's paying attention. So 3 years ago, Filo had in the Vicuña district down in Argentina, they had an oxide cap, okay, and they're high elevation, so that deposit was going to be marginal. The last drill hole of the season, going into the winter, they drilled a drill hole 1,000 meters or 1% copper equivalent into the sulfides, dimensionally changed this deposit, and yet nobody was paying attention. Stock jumped from 185 to maybe $2 and came back down. So I called up James Beck and Adam Lundin over at Lundin Mining Group, and went over, sat down with them, and I said, is nobody paying attention to this? This is a game changer. And yeah, a couple of people called on that, but it's because again, no one was thinking about it, and if people were thinking about it, they were thinking, well, that was the last drill hole. Winter's coming, they're not drilling for 6 months. I'll buy it later on. So they do a $40 million equity raise, and the family comes in for 20 million of it. And in that realm, Lucas Lundin, who is, I think, the #1 mining icon in Canadian history, that's my opinion, made a quote saying that this could be the biggest discovery of his career. And the Lundin family have had huge successes over the years. So I'm looking at this going, okay, still no one's paying attention. So we participated in the financing to a significant tune alongside the family. And then for the next 6 months, I kept on buying the stock, and nobody was paying attention. We were probably 80–85% of the buy side. And then they pulled the next hole and began the season. The rest is history. And the stock got halted at 330, opened at 650, hit a high of $25 recently. But the point being is that in the mining space, because there's an absence of money, opportunities come along. And copper stocks unfortunately coming off right now because of the recession worries coming into play. But in the precious metal space, we have an absolute void interest in the space right now. I mean, Canada is the mining capital of the world. Vancouver and Toronto are the mining capitals. And there's very, very, very few people that run businesses like myself in Canada now, because a lot of investment advisors left and went after crypto, cannabis, digital, new age, this and that. And so the audience, Canadian investors who are primarily mining oriented, and we have a competitive advantage because we're the mining capital of the world, we have an absence. So that just tells you how off the radar it is. But like I said, opportunities come along that are so low risk, so high reward, and no one's paying attention. Gold's trading at $2,000 an ounce right now, and the Western world isn't paying attention. And that's the opportunity.
In the ground value of what's in the ground is trading at where it was in 1999 and 2000.
Exactly. And it's a very frustrating position to be in. But, you know, as I say that, you know, I love it because I can keep on buying these stocks. And years ago, I dealt with a guy out of Chicago, and I remember him saying to me, he says, you know, Cam, if you're gonna get hot at the craps table, do you want to have one chip down or a lot of chips down? And that's the key. It's hard to buy when things are already taking off. But human nature is such that people follow, no one leads. And it's a tough place being.
I think part of the problem is too that not only is the industry the shifted away from mining, the media has shifted away from mining, and there aren't enough guys like you and me that have all these gray hairs from experience in the business and the scars from it out there. You know, I was very fortunate. I was in the lost generation. I got into the business in 1993 when I was 29. And I was really fortunate to have some great mentors in geology, geophysics, and geochemistry. And I always felt that, man, this information needs to be out there to more people, which is why I started my shows back in 2005 and my reports. I was fortunate to receive all this information, and I wanted to pass it on. And there's just not enough people. And, you know, that's why I was really happy when you recommended you come on, because you're doing that advocacy work that the industry needs to help people to understand the opportunity that's out there.
Well, and you and Alan, and that's, we talked about this before the interview, is that, you know, a lot of people who, you know, will decide to come into the precious metal space, you know, where do they get their guidance? And that's a problem. There's very few people that are specialists that understand the industry, have their relationships. I have at my disposal, you know, one of the top mining teams in the country, Canaccord Metals and Mining Group. And I've got probably 40 clients who are geos and engineers. You know, I've got very deep-rooted relationships. And, you know, one of the problems with mining investors in the past is if they try to do it themselves, they go into websites, look at companies, they say, that sounds good. There's so many misleading facts. They've got it. It's like trying to perform open heart surgery on yourself. You can't do it. You need someone who knows what they're doing. And but anyway, it's a very, very interesting time. And going back to no one's paying attention and to be an advocate, that's one reason why I'm openly speaking about it, because I see such incredible value opportunity. And for those that are seeking proper guidance, that really recognize that, you know, this should be something a part of their portfolio, they need to go to someone who can actually do the right job. And, you know, the narrative out there, this is my summary of the narrative. Picture yourself in a 60,000 person stadium, and NVIDIA and Tesla is the game, and there's a lineup out the door, right? And that's what the game is right now. There's 10 of us in the nosebleed section trying to get the wave going in the gold sector. And I mean, think about that, because that if you look at the narrative in financial media, it's not far off. And yet gold's trading at all-time highs. So I don't know. Most people that are successful in life are successful because they're somewhere before other people are. That's how I look at this. It's painful because what we're observing is so obvious to us, but we're up in the nosebleed section and no one's paying attention to us yet.
But look at the guys that have had a career in making money in this industry: Frank Justra, Rob McEwen, Pierre Lassonde. All of these guys are talking about the exact thing we're talking about right now, is the valuations, similarities to 1999 and 2000. And they talk about it. I seen Frank Justra and Rob McEwen do a couple of talks. One was at the Beaver Creek, and you know, they were talking about how the 1999 and 2000 was a magical period. And we had to see it in the rear view mirror to understand it was such a magical time. It didn't feel like a magical time back then, but here we are again. I think I really think the argument to be bullish on gold and silver and good quality stories is even more magical this time.
Well, and again, I'm testament to that. I'm sitting in the mining capital of the world. And I mean, Canada traditionally has been mining investors. You know that, Alan.
Yeah.
And I'm a barometer of the absence of buyers. The only reason I feel so comfortable with it is because I've been here before and I've seen this. But quite honestly, I've never seen this where, you know, gold's at all-time highs and our stocks are trading as if gold's at 1,500 or 1,300. I mean, it's just shocking.
Yeah, well, that's the difference between 99 and 2000 and now, is then you also had gold trading at all time or close to all-time lows or under $300 an ounce. But I think the argument for gold to go higher is maybe stronger now than it was then. Basically, the only thing, it was China and India buying gold. Now you've got China and India continuing to buy gold through all these years,
Middle
and
East.
now adding the central bankers onto the story.
And, you know, again, example, Mercer Group on January 1st, 2022, they're advisors to $15 trillion of global assets. They, by charter, went from a 60-40 bond equity balance. They added gold, 5% weighting in gold. Now, if you did that, you benefit because bonds and stocks are down and gold is up. But no one talks about that. But, you know, again, there's an example of a front leading organization, but no one even talks about that. The financial world doesn't even talk about what's going on. Right.
And they're missing the boat because I see a lot of countries, this not just the Brics nations either. I want to talk about the Brics nations with you, but even European countries are now having a somewhat of a gold standard in that they're at about 3 or 4% of their GDP. You know, there's something brewing here, folks, that you're not paying attention to, which is we're kind of going back to somewhat of a gold standard. And then you look at the Brics nations and what they're doing, and they're all buying gold.
Yeah. Yeah. And that's the thing. I mean, again, going back to the use of US dollars on a global scale, the last 20 years, transactions denominated in US dollars has gone from, I think, 60 to 42%. So it's becoming less and less relevant. And the Brics nation, you look at the Brics and the expansion now, what, 8 new members proposed. The Brics, I think if you look at I mean, there was speculation they're going to come up with a new currency, Brics currency. I can't see that because I can't see the political or economic alignment of creating something like that. But the common denominator amongst the Brics nation is they don't want to be beholden to the US dollar for transactions. They don't want to have to use that as a medium of exchange. And so you look at, you know, they want to transact in their own currencies. But look what, so here you are, and you have US policies dictating US dollar movements. And you're, as a country, you're beholden to those. And so it can be very damaging. I mean, if you're in Turkey, for example, and you had your debt denominated in US dollars last year, wow, you got hammered.
What if you had old gold instead?
Well, exactly. And that's what saved a lot of people, but no one really talks about that. But the point being is that I think the power of the Brics, or what the Brics represents in my mind, is you have the autocracies of the world who are getting tired of the G7 democracies dictating policies. And so you're seeing more and more movement. And, you know, let's face it, the US dollar also, no one talks about this anymore, but, you know, with the sanctions against Russia, weaponize US dollars, right? And so you look at India, for example, India's import of oil out of Russia increased 32-fold. Now, is the US going to impose sanctions on India for them supporting the war machine? No. But the point being is there a risk to India? So India continues to be buyers of gold. Culturally, India is a buyer of gold. I mean, it's part of their wealth. Gold is viewed as a wealth, as a store of value. And so
Same with China.
Yeah, exactly. So that goes back to some of the initiatives of the World Gold Council about re-establishing gold as
Before you get into that, I want to go back. You talk about narrative and narrative investing. And sometimes the narrative gets focused on the headline. And with the Brics nations, the headline is that they want to create an alternative world reserve currency. Meanwhile, their actions are to buy gold and to start creating alliances where they can trade with their domestic currencies.
Right.
So what the difference between the headline and reality is that they're not really doing anything to create a new world reserve currency, but they definitely are taking steps to have something else besides the US dollar for world trade. And gold can play a role in that as well.
Well, again, going back to any reserve currency status in the world, and reserve currencies come and go, and China continues to buy gold. And, and again, eventually, I mean,
the country and the citizens.
Yes. And so you have these autocracy central banks continue to buy gold. Now, who knows what the end product's going to be, but gold's relevant to these reserve currencies or these currencies as they elevate. And let's face it, China-Russia relations are clearly getting more and more strained. And and China's inner party have long held the position that U.S. is trying to suppress their supremacy. And so China has been globalizing the world with foreign investments, the Silk Road initiatives and that, and foreign investments in other parts of the world. They're controlling a lot of the commodities of the world. They've got a 100-year game plan in play.
Absolutely.
Right? And so gold is a relevant.
Not 100-hour or 100-day.
Yeah. So gold is a relevant component to their central bank holding, and it's on the rise.
Yeah.
And so who knows what the end is going to be on that one, but gold's relevance to them and to the reserve currency or currency backing for themselves.
And the dominant trade currencies throughout the world. Sorry I interrupted you there, but I'm glad I did, because I think you were going to talk about what's happening with the World Gold Council. And I think this is all going to be part and parcel, because if you make it less friction for individuals to own gold, you make less friction for trading in gold, amongst the countries of the world, that, they won't have to just ship it all over the place. They can digitally do it very rapidly. And that.
Well, and again, if you actually segue the critical mass of narrative towards a digital stablecoin in gold, and it becomes what you're referring to, I mean, you can make the argument as it gets more and more adopted and validated as that instrument, it becomes that instrument, right?
Mm-hmm.
What's different about this instrument is it has no debt obligation, 34 trillion in US debt, no printing press, right? Look at the Fed balance sheet, 8.2 trillion. So as an asset or as a currency, does that sound attractive? And by the way, it must be, because what are these central banks doing?
They don't want to back it up with debt, US debt and US currency anymore.
Exactly.
They're putting it into gold.
And everyone goes, I remember back in 2001, Barry, I'll tell you the story, Alan, that is, but I was at a Canaccord conference, and I was buying the gold stocks, and I missed the .com bubble because nothing made sense to me whatsoever. And someone walked up to me and said, "You know what? You're a dinosaur." And I remember listening to that, going, okay, I had to really do a check and balance in my thought on this one. Okay, am I not seeing something here? And then people would say, it's different this time. And so in 2002, I sat back and had some deep soul searching thoughts about where we were in the market, the world, et cetera, et cetera. And again, I went through everything I was thinking, and I'm big into macroeconomics and politics. And it inspired me to be where I am in my career now, because I realized that no, it isn't different this time. And there's a great opportunity and nobody else has recognized yet. And it was just, but I mean, it was a tough time. And this year has been a very interesting time, because a lot of these NASDAQ stocks, I mean, you look at things like Carvana, which was $350 a share, it bombed at $3 a share.
As the .com. I mean, the similarities are striking.
But people think they can make their money back. And so, but the point is that you've had seen some of these big wins in some of these things, and we're sitting here and we're like trying to defend our integrity, and yet gold's at all-time highs. And because again, the freighter that's turning is taking longer than we thought to turn.
Right, right. But what gives me confidence is I'm a kid who grew up on a racehorse farm near Vancouver. I always try to, you walk behind the horse and you slap him on the bum and he's going to kick you. That's just the way it works. And economics has a way of fixing stupid. And for 50 years, the whole global economy, the US economy, has been built on debt. And it was stupid to go off the gold standard because it gave discipline to politicians and central bankers.
Yeah.
Well, I don't think people really realize that we're returning to somewhat of a gold standard. And with the death spiral of debt, I don't think it's stoppable. That we are seeing more of a gold standard, and individuals should create their own gold standard.
Well, to go back on that, I mean, let's just go to the comments. Okay, Jerome Powell, we're on an unsustainable path. Okay, so many financial leaders, we're on an unsustainable path. But it's like, well, I'll deal with it when I have to deal with it. Well, by then, it's like when your house burns down, you have no insurance. Oh, well, I knew I was on an unsustainable path. I knew there was a risk of having a fire, but I didn't realize it was going to happen, and I didn't have any insurance in place. And again, I'm not trying to sound negative.
And they're saying that, well, the fire is coming from over there, and it's going one house after another, and you can see it coming, but I'll wait till maybe it'll go by me.
Yeah.
It's like what the Fed is doing.
So again, it's, the fiscal house where it is, but it's a global phenomenon. I mean, look at the problems they're having in China right now with, the real estate market. I mean, it's a multitude of things. And again, going back to it, I'm just surprised at how in denial people are about the debt risks that are very ever present.
I don't throw around things like death spiral of debt for the fun of it. It's readily apparent to me. If you go from so long with free money, and even before that, before the free money area, you had 40 years of building up debt. Then you had 10, 12, 14 years of free money. And then you shock the system with cranking it up to over 5% at the Fed rate. And mortgages are higher than that. And interest on your credit card is more than that. And, it's inevitable that we're headed towards a new gold standard. And for me, I'm a treasure hunter at heart. I love looking at what's in the ground, and there's a disconnect between what's in the ground and what it should be worth. That's what I try to focus on, because I think you can buy gold at a lot cheaper than buying gold when it's in the ground. And so,
and to go off on that too, I mean, you look at where we are in terms of gold production, global gold production. And I mean, everyone says, oh, yeah, but gold, you can create gold. Well, I think gold's percentage change of increase is 2% on average for the last, 30 years or 20 years or something. But, I can tell you, coming from Vancouver and being a part of the mining community, the scarcity of assets coming down the pipeline. I've never seen such a shortage of projects coming close to production. And, what people don't realize that tomorrow, if you put a drill hole in, discovered a new project, you're like 15 years till you see it on the ground.
15 years before getting.
Yeah, it depends. I mean, Nevada, yes. If you go to West Africa, it's a faster timeline and that. But I mean, it's not that easy. No. And so on the supply side, you start getting the investment demand coming back in, and central bank continues to buy the supply side, and then you throw in the acceptance of a digital 247 gold-backed stablecoin into the financial world, and you think that maybe people like Larry Fink will rethink, the ETF ownerships into gold-backed stablecoins, as he has with ETFs onto Bitcoin. I mean, where's the risk reward? And like I said, every once in a while things come along, they're so low risk, so high reward, and no one's paying attention.
And I want to close on one thing. I pay attention to the Lassonde curve. And I don't pay attention to it from a, you perfectly plug something in here, and here. But when I look at from the right side and backwards, the major mining companies, they're going deeper in the ground. Their head grades are in decline for over 10 years now. What they bought in the 2001 to 2011 bull market may always sit on their ballot or in their resources and never become a mine. So they need to replace what they're mining every year. So then you go back to, well, what's in the development discount window? And everybody hears that development discount window and they go, oh, I'm scared of that. Well, the reality is that that's a tremendous opportunity as well, because those major mining companies, they got to start cutting checks for the development and the explorers to help their resources. And there's just been not enough exploration, investment, and success. And it's so hard because mining is hard. You've got to go deeper in the ground, undercover. Everything that came out of the ground has been found. Now you got to throw more science at it. And the explorers don't get the money that they need and the patient investors that are needed to then make the discoveries that move into the development discount window. And this whole pipeline is broken.
Well, now, just on that note, I mean, especially right now, I mean, gold's, pierced, as you said earlier in the interview, all-time highs, monthly all-time highs. And there's a number of these juniors, explorers and that are sitting, on ether here, trying to survive. Yeah. And that's the problem, is that, there's no money going into the ground. And the thing about exploration companies, you drill, you discover, you have to raise money to keep on drilling. And the audience of investors in the sector has largely disappeared. I mean, largely disappeared. And that's where the great opportunity is. But you've got to go in this with a time horizon, not a quarter or 3 months, or, you look at the US investor now, the number one trading instrument amongst some of the professional traders is buying call options on daily ETFs. That's the mentality of the investor, right? So if you're going to come into
a derivative on a derivative.
Exactly. So you have an absolute void investment base, and yet gold's where it is. And that's what's so painfully shocking about where we are. And what that leads to down the line is an absence of projects coming forward, right? And the one thing I remember Ian Telfer from Goldcorp was telling me years ago, he said, one thing about the mining industry, Cam, is that as a senior or intermediate mining company, you have to acquire assets to replace ounces, or acquire assets to grow. Because the big boys aren't really good explorers.
Horrible.
Right? But the point is that, the machine has to be fed, and there's no money going into feeding the machine right now. So there's a vacuum of supply that's going to sit on, and when demand is going to continue to increase. Yeah. So I look at this, right? In
the development discount window, like, I don't know if you follow Silvercrest, but they started full commercial production at owing $100 million. In the first 2 quarters of their of full commercial production, they paid down the $100 million, and now they have $100 million in cash, and they bought back stock. And yet their stock is not trading at a 52-week high. It's just coming off the 52-week low. So, there's an opportunity that, you see companies in the sweet spot of the right side of the Lassonde curve, and that look like they've got a nice long trajectory ahead of them, and nobody's paying attention. It's amazing. You're picking up pennies off the ground that everybody's walking over.
And that's the thing about it too, is that there's very few of these companies around.
Right.
So when the money, and again, I don't mean to sound, kind of reckless with this comment, but, in Canada, we had the cannabis space before it was legal in the United States. right? So all these cannabis stocks went public. And by the way, there's no boundary or limit. I mean, if you had a wheat field, you could tear down the wheat and put cannabis up. So there was unlimited potential supply of product.
That
Unlike,
stuff grows like a weed.
yeah, yeah, exactly. Whereas in gold, I mean, it's a very finite amount, right?
Absolutely.
But what happened though is U.S. investors, the only way to participate is to buy cannabis ETFs. Okay, so the ETFs would spray into like an umbrella would spray into the underlying components. So a lot of people, when they're buying these ETFs back in that bubble, were buying Tilray at $270 a share. Today it's $2 a share. So ETFs, and going back to something this would be a whole nother conversation, is the power of ETFs, because 85% of the volumes are quants and algos, and ETFs are everything. And ETFs are driven by narrative. Case in point, the narrative of BlackRock doing the ETF on Bitcoin has Bitcoin where it is.
Even before it happens.
Anticipation of, that's what happens.
Yeah.
But in terms of the cannabis space, so we saw these stocks take on a life of their own. They far surpassed any potential valuation matrix. Yet everyone was chasing them because that was the narrative. So let's fast forward to gold 2100, 2200, and the rationalization as to why gold is going higher, and maybe you should have gold as part of your portfolio. And then gold equities start getting the narrative, and the monies start spraying into the gold equity ETFs. Well, as I said, the market cap of the entire gold equity sector globally is less than Home Depot. So, again, who knows when, but there's a high probability that's going to take place.
I think there's a crowd that's going to try to come into a very small door.
Yes, exactly. And fundamentally, the stocks have never, ever been this fundamentally strong and cheap.
Yeah, it's amazing. It's amazing.
And so anyway, but again, eventually, like, Alan, you asked me to speak to this because, you've mentioned the fact that we need more narrative, we need more statespeople in the industry and that. And, in the past, we had the Pierre Lassondes and the Sean Boyds and that, and McEwen's. And now I think one of the strongest advocates in social media or in media is Randy Smallwood, World Gold Council, president of Wheaton Precious. And, we need more and more people, because you can't just have 10 people in the nosebleed section getting the wave going. You need an audience of people, a critical mass for people to pay attention.
Yeah.
We see it. We've just got to convince other people to recognize the opportunity.
Well, I'm glad you took me up on the offer, and I hope we can do this a bunch more, Cam, because I love talking about this stuff. I love to put holes in the ground and look for buried treasures, and I like the process of bringing those buried treasures out of the ground, and the value of what those buried treasures are, and why they're not being paid attention to, and how important they should be paid attention to. And I think we're of the like mind on a lot of that, Cam. And
what, Alan, we are, and I got to mention, that's going back to how we came across this. You and Downey of I-80 introduced us. And my clients and myself are major investors in I-80, and there's a classic example of somebody who's had great success, and now Ruby Hill and what's going on there. And and Ewan is a major shareholder. He owns over 5 million shares. He bought a lot of stock at $3 plus. He put his money where his mouth is, and all I know is I've been with Ewan many times in previous investments, and they've always ended up very, very successful.
Well, he had Wolfden. Found, built, sold. Premier, found, built, sold. Now I-80 Gold, and he's building it. And what boggles my mind is people just don't look at the data. They have at McCoy Cove, they've got over 1 million ounces and growing at a 10 or 11 gram per ton average grade.
Very high grade.
Excellent project. Then Granite Creek comes into their hands, and in classic Ewan Downey fashion, he uses that drill rig to enhance the asset, and he goes from what was a struggling mine a little bit better, and then he starts stepping out and finds the South Pacific zone, and that has excellent grade and continuity. You can't just have grade to have a good mine. You have to have continuity. It's got great continuity as they step out along strike. And the continuity this way is also, and in fact, they're getting better grades. And then you look at the runway they're on. That runway of that kind of rock and that structure goes right into a 25 million ounce gold mine.
I know.
And
Turquoise. Crazy.
and then that on its own is a, so with the Cove McCoy, you have an asset that would be a company maker for a small miner. Then you got Granite Creek that's sitting beside an elephant, looks like they got an elephant, without a doubt is a world-class project. Then Ruby Hill comes onto the scene, and they've got a Carlin deposit sitting right beside a high-grade CRD, sitting right beside a skarn, and yet they're just coming off their 52-week low.
Well, and then you tack on the fact that they have a processing facility, okay, Lone Tree, which you can never get permit to, and even if you could, it would take you 7 years and $1 billion.
Exactly.
So they've got a processing facility for all this refractory ore. And going back to Ruby Hill, as I joked with you, and I said, Ewan, once again, you're suffering from too much success. Your story's gotten complicated. And I mean, the market cap's 400 million US, I think it is, in this company. And you look at, I mean, there's no company in the United States that has this growth trajectory.
None.
And it trades New York, and yet it's coming off its 52-week low.
Yeah.
Shocking.
Yeah.
Shocking. Anyway, but again, you know, we've been through this with you and before, and again, I'll back this jockey anytime.
Any day, any day. I've had a ringside seat. He's been coming on my shows for 20 years. You and I have known each other, and yeah, I mean, it's kind of a microcosm of the entire industry.
Exactly.
Great assets, great growth profile. Company builder, owns a bunch of his own stock, has done
Great
it
team,
before.
great team.
And
about that team's first class jurisdiction, number one jurisdiction on the planet, Nevada. And you know, again, I also look at this when the US investor decides to come into the gold sector. There's only one I-80, and you know, I remember when they announced the deal. We were down at Beaver Creek, and two corporate guys came up and congratulated Ewan on putting this deal together, said it was the best deal they'd ever done. And I put it in this perspective to you, and I said, Ewan, you've just taken a box, put all these beautiful presents inside of it, put this wrapping paper around it, put a big ribbon on it, and put it on this shelf. And there's only one of you, because nobody else has ever done this.
Nope.
And yet they're getting all this unlove in the marketplace, and yet he's put this beautiful package together, and each asset's getting better and better. I don't know of many. Again, like I said, I'm a big sponsor, and I'll back you in any time.
Absolutely. And I'm glad he introduced us, Cam, and I think we should do this more often. And I really appreciate your time. I know you're a busy guy, and it's been great to talk about this. And I think my audience will benefit from it, and everybody that checks this video out will benefit from it. And let's do it again sometime.
Okay, Alan, thank you so much. I appreciate your time too.
Yeah, okay. I'm going to wrap it up. We can talk at the other end for a minute.
Okay, sounds good.
So there you go, folks. Really happy to have had Cam on the show. A tremendous experience on the brokerage side and the money side of the business. Understands the mining side, and is a great advocate for the industry. And I think we need more advocates like Cam, and I try my best, and I'm glad he joined me today. As always, my shows are for information purposes only. Speak with your financial advisor. By the way, Cam is a financial advisor in both Canada and the United States. And do that homework, because I think that's what separates people like Cam and other successful people in the business, is they do the homework and they focus on the data and not on the data of the day-to-day fluctuations of a stock price. And I think that's a recipe for success. So do that homework, and thank you for joining us, and we'll talk to you soon.